Good afternoon, everybody. This is Chills and Day with ChronoHistoria.com. Today we're going to be talking about which one's better, cryptocurrency or stocks. And this article is important because for a certain type of an investor, cryptocurrency might actually be a better option for you than the stock market. It all comes down to whether or not you know how to hedge, you know how that term works, and most importantly, your current financial situation and the degree of risk you're willing to take on. So let's hop right into this. So there are two global markets for liquid assets, stocks and cryptocurrency. What this means is that you can liquidate a position, you can enter and exit a position very fast, which allows trading to happen in an efficient moving of capital. Um, Cryptocurrency right now has high commission rates, especially since Robinhood with the stock market pretty much forced everyone to go commission free. So trading has become a bit more difficult in that regard, but the spreads are sometimes a lot higher, which means you can actually do high frequency trading on the cryptocurrency market. And currently, as it stands right now in December 2021, pull out a lot of money. Actually, there's some people who are doing that quite successfully. So what it really comes down to is whether or not you should decide if you want to go into the cryptocurrency market or the stock market is how much risk you can handle in your portfolio. If you can handle a lot of risk, spoiler here, but the cryptocurrency market is probably be a better option for you. Just buying and holding, you can see massive returns. 100, what's that, 1,000, 2,000% year over year. Just insane returns with a very liquid market, which is just absolutely insane. So my name is Chosen Day, and here at Chrono Story, I teach people how to generate above normal market returns in their portfolios. I constantly publish articles on individual research, methodologies, and tips and tricks of the trade so that you, the reader, are better armed to make sound investment decisions. I do have a newsletter on the website it's free. You can use it to sign up, and I only use it to keep people up to date. It usually goes around Sunday or Monday. It just kind of keeps people updated on what's going on in the market. So you never know. Just signing up for it might open up a world of possibility for you. All right. So let's hop right into it. Expected risk in the cryptocurrency market and stock market. Now, the risk in the stock market, you can define it pretty easily. This is because you can look at things such as tangible book value, EPS, earnings per share, and you can see if worst case scenario, if a stock got hit by a meteor, if a company got hit by a meteor, the stock would be worth this. You can sell a chair or a computer screen or whatever, and with the liquidated value of the company equivalent to the stock's price. So there's a floor for the stock market price. So when you buy like a share on the stock market, you say, hey, if you calculate it out, I might only be risking 10, 15% of the total position over the next 6 years, which isn't that bad when you average it out. Now the returns in the stock market they're capped, but in relation to the risk, it's a more conservative choice. There are some ways in the stock market, such as options, that you can get into the return range of the cryptocurrency market, but the issue is you're risking 100% and it's on time decay. So you have also that going against you. Further, the stock market macroeconomic theories apply to. So, for example, Malthusian economics versus real market economies would be one, or efficient market hypothesis would be another. These different types of theories, which over the past century have proven time and time again to be successful. So, if you can apply theory to something, you can actually turn it into practice. That's kind of like how epistemological changes happen. But going back to this in the stock market, there's regulatory exchanges that were put in place to protect retail investors in the stock market. This is something you're not going to have in the cryptocurrency market. These are things like trading halts, 13F reports, 10K, 10Q, stuff like that, where you actually know what's happening and you're not just relying on sensational news or a podcast or something going on to inform you what's going to happen behind the scenes. The government, at least in the United States government, forces companies to produce accurate results. Accurate in quotation marks. There are people who do rely on these, but they're few and far between. Something else is in the stock market, you can hedge. A lot of people don't really understand that, but with hedging, you can pretty much keep yourself in the game even if your stock blows up. There's a couple ways to do it. One of the previous videos I did is on top like 3 ways you can hedge a portfolio. I highly recommend you guys check it out or check out the article Chrono Historia. That way you guys can be more informed. That's the real secret of the stock market is the fact that you can hedge to clearly define your risk and even make money in case your investment fails. You still come out on top. It's a win-win situation in theory, right? Risk in the cryptocurrency market is undefined, right? So the worst you can lose the cryptocurrency market is 100%. Therefore, we say that whenever you buy a cryptocurrency coin or NFT or whatever you're going to buy, the risk is capped at 100%. You know, unless you're doing like advanced, pretty much contract options trading on it, then you have an undefined risk. And I would not do that if I were you. There are ways, and it's kind of a burgeoning field, engaging an options contract on the cryptocurrency market, but I wouldn't touch it just simply because doesn't have a regulatory exchange like the SEC. Uh, Now, we're going to talk about the returns in the cryptocurrency market, and that's where we're going to actually shine. As much as I like rag on the cryptocurrency market compared to the stock market, I play both. I make my living in both of them. Uh, the cryptocurrency market is a better investment for younger people who can afford to take dents in their total net worth over time. Over the past 10 years, Bitcoin has shot up like things like 26,000% or something. Just unheard of numbers. You would never get that in the stock market. Speaking of which, the average return in the stock market averaged out over the past 100 years is 9.25% per year. And that's good. Compounding interest, as we see down here. In this one, we have a total portfolio around 100,000 with passively dividends paid out monthly at 7%. Over 30 years, you're going to almost 8x that, right? But in the cryptocurrency market, you would have done that in 3 years, right? The benefit is, as I talked about earlier, the risk in the stock market is clearly defined. It's as much as people want to say it's not a fair game, it is a fair game if you know how to play it, and that's the problem. Nobody knows how to play it. That's why I'm here. I teach people how to do this type of stuff. Uh, Now, the return in the cryptocurrency market, this is where things get cool. All right. Top 10 coins. This is if we made an ETF for the top 10 weighted coins positioned to market cap. Much like the S&P 500, we make the S&C 10 or something, right? And we put $1,000 in 2016. In 2022, the projected value would be $63,000. That's 63 times your investment. You are not going to get that in the stock market outside of like getting like crazy in options trade back to back to back to back. And this is just from holding it. So like if you just hold a cryptocurrency, you're going to make money on it. I am a prime example of that. I'd say about 5 years ago, I put $80 in a cryptocurrency called Redcoin, RDD, and I pulled out 2K of it, I think, 5 months ago or whatever. Put that in the Dogecoin during that whole pump, and I flipped that to 10K. And then I put all that in the Cardano and walked away with 35K. And that was from an $80 investment. You will never find that in the stock market. So points proven. If you can handle the risk, whatever you put in the cryptocurrency market is going to have a 100% risk. There's no way around that. You can hedge in the cryptocurrency market, and this is a very, very cutting edge thing. But recent studies have shown that people who invest in the cryptocurrency market also invest in like high frequency trading or options trading in the stock market. And since they have the same portfolio value and the cryptocurrency goes down, that one goes up because they just allocate capital differently. And thus you can hedge because if two things have an inverse pairing, you can hedge them. That's like super cutting edge. We expect to have more research done over the next year, but it's looking more and more like cryptocurrency is becoming a more solid and commodified part of the global equity market. So the whole point of this article is to decide which one is better for you. I'm not going to sell you anything, and we're not here to try and convince you to do anything. It comes down to this: the stock market is good for a professional and seasoned investor who knows how to manage risk, a retail investor with a sizable nest egg, and you just want to retire. If you're risk adverse and just want to grow things from major life events, marriage, retirement, family, etc., or if you're actively looking to hedge your current investments, right? So you're looking to build out an entire portfolio. The stock market is meant for people who want a low stress lifestyle. They know where they're going to be 10 years from now, 15 years, 20 years from now. The cryptocurrency market, this is the wild, wild west of investing. Okay, cryptocurrency market is for someone who does not care about risk. You just want to maximize your potential return. If you understand Python programming, you can build algorithmic models to do the high frequency swing trading I was talking about earlier. It's also for you. There's a couple good platforms out there, but in reality, you're going to have to kind of make your own. If you can manipulate retail investor sentiment, this is also a good spot for you. There's a couple of YouTubers out there who have like subscribers in the 2 millions, and they'll put out some sort of sensational video about Cardano or something, and Cardano will legitimately go up 10%. I actually know people on the street who have built algorithms, and what they do is they just scrape YouTube closed caption data to figure out who says what before the retail investors can even look at the video. They'll just instantaneously pull it. And that's also a pretty cool strategy. If you guys want to know more about that, just reach out to me. I can help you with that. If you're an investor who has excess cash you want to essentially gamble with, cryptocurrency market's pretty good. Also, here's a major one. The cryptocurrency market, since it has no regulatory guidelines, such as the pattern day trading rule, for those of you who aren't aware, if you have an account balance under 25,000 in the U.S., you cannot trade more than 3 times in a 5-day business rolling period, or else you'll just be flagged for pattern day trading. This is an age-old rule that just needs to be given away, but that's the rule nonetheless right now. Cryptocurrency market doesn't have that. It allows you to trade as much as you want, whenever you want, for as long as you want. So, yeah, that's it. To summarize everything, if you just want to save and grow and have a happy, stress-free life, stock market's good for you. If you're somebody like me who enjoys investing, the ins and outs of it, trading psychology, how to build algorithms and all that good jazz, cryptocurrency market is probably more your style. I invest in both of them as a disclaimer. I would say my portfolios, majority of my portfolio is on the stock market, but my main one, which pays me dividends and royalties and all that good jazz, I'd say 80% stock market, 20% cryptocurrency market. The 20% of the cryptocurrency market is essentially what I'm expecting to be worth about 50 to 60% of the stock portfolio in about 8 years, assuming the rates continue, which you can't get out of either the stock market or the cryptocurrency market. So anyways, I hope you guys enjoyed this video, and if you do, make sure to subscribe to the newsletter on the website or share around or, recommend to your friends, whatever else you guys want to do. I'm always down to talk about this stuff. So until next time, best of luck on your investing journey, and this is Chills and Day signing off.